Hey everybody, this is John, and welcome to tonight's videos. So I'm just taking a quick, I guess, kind of looking at the day first, and then we'll kind of step back and see everything that happened. So I thought today was pretty interesting because it started off similar to Monday, and then also similar to Monday, it kind of petered out over the lunch hour. But then, unlike Monday, it actually recovered and kind of closed right at that key 4250 level while it was waiting for Google and Microsoft, which we'll also get to. If we compare this to the prior day, you can see that we kind of came up here, had this fantastic rally, and then I actually thought we would pin here at about 4250, and then it just kind of petered out into the close. So what was interesting is that when it happened then today, I think everybody assumed it would peter out, but then they had to scramble and kind of get out of the way of all the call buying into the close. And if you look at the call buying in the close, it was pretty insane. This is, of course, the data that we watch from Spot Gamma, but this shows the 0 DTE flow and then kind of all SPX flow. But it was just call buying all the way to the close. And when you see puts flat like this, it means no one's buying puts. And then if they're buying calls, well, think about it. Why are they buying calls? Because they were shorting them here. So you get a situation here where everybody's selling calls. And then when it starts to rally, they're forced to buy those calls back. And guess what that does? It forces the market higher. So very much a story of the market just kind of being whipped around by options flow today. And, it has impacts every day, but today was particularly noticeable. So from there, we had, of course, after hours, we had some earnings coming out. And it was a bit of a wash. Of course, all eyes on Google and Microsoft. There's really only 7 key stocks out there. These are 2 of them. Google was trading 139, had an expected move of about $7, and then after hours is down about 9, so a little more than the expected move. Basically, their ad business was showing growth, but the cloud business was a disappointment. We'll see what it does tomorrow. I mean, I don't think it's going to recover. I had sold some put credit spreads here with the idea that it would be flat to up. Of course, that was not the case. Microsoft, on the other hand, with an expected move of $13, is actually up, well, it's a little bit more than that. So while this is Google's down a little bit more than the expected move, Microsoft is up a little bit more than its expected move, and ultimately kind of a wash on the NASDAQ. Initially, of course, with the Microsoft jump, it popped up, and then with Google, it came off and kind of just ended up where it closed. And so at the end of the day, I mean, it'll depend where we open up. I don't know if Google will recover it all, but kind of a wash. So it really comes down to, what are the indexes doing here? What's going on? What's going on with the indexes and all of those key levels here in terms of what are the next moves, right? All right, so what are the things that we want to look at there? Well, we'll look at the indexes. First thing to keep in mind is that the 10-day moving average of the put-call ratio is hovering at 1. Okay, is this bullish or bearish? Well, it's bullish with the idea that everybody's loading up on puts. Okay, here it's an indication everybody's loading up on calls, and when everybody's bullish, no one else is left to buy and the market sell off. Here, everybody's loaded up on puts with the expectation that we fall. So typically in this scenario, what happens is that we actually end up rallying until this can come back down to here, and then from there, so if we are going to, let's say we are going to, downtrend here, the idea would be then we rally, and then everybody that was buying puts has to get out. That drives it down here, and then then we'd roll over. So just from that alone, which I found to be pretty accurate over the years, and even though I don't think this market is going to go ballistic anytime soon, we are in a downtrend. We have a kind of a clean downtrend channel here, and let me fix this. So we have a clear downtrend channel here, and even in really bearish markets, it's very rare. I mean, I think everybody gets remembers that there's that one day where the S&P's dropped 200 points. Well, that doesn't happen very much, and obviously when it does, it's great if you're positioned for it. But we don't always expect that. Even in the light of all the bad news, I would expect the market to continue to stay within this trend line. Even if we are going back to 3,800, and I actually don't think we are at the moment. Um, I think that ultimately we're going to see some more strength in early 2024, and then things get ugly. But again, we're here to focus on kind of the shorter term, not so much what's going to happen next year. But I guess it's just a long way of saying I'm not looking for a market crash. Everybody's like, "Oh my God, the news, the news," and the market knows all that. The market is smart. The market is looking out 6 months from now, not today, and we just always want to keep that in mind. All right, so if we're looking at the NASDAQ and the S&P futures here, this is a 30-minute chart, but I've got the key daily levels overlaying on it. So this is -2 ATR on the daily, -2 ATR on the daily, and then we got the 21 EMA, 8 EMA, and 5 EMA. And the market's always, even in a downtrend, we're always coming back and kissing that 5 EMA. And on uptrends, we're coming back to that as well. And so if we zoom in on this, just to kind of see, where we are in the current price action, let's zoom out a little smidge here. So the idea with this is that when you come down to kind of -2 ATR, essentially the play is a reversion to the mean. And the mean is typically I look at as the 21 EMA. So that's 43.36 on the S&P on the ES futures, which should be about 4,300 cash. And then 15,000 here on the NASDAQ futures. I don't know what that is on NDX, but we can always look at that. So in a in a high momentum market, you can't get through the 5 EMA. And then in kind of a more of a medium momentum market, you typically are going to go back. So I do think that at this point, the odds of us at least coming back to test the mean is high. Everybody that's gotten short down here kind of needs to get their faces ripped off. And then from there, we could roll over. So at the moment, I'm not looking for the markets to go to 4,000 or anything like that. And I think that's important because again, there's a lot of bad news out there, and it's easy to get enamored with it, and think of all the money we could make on a crash. But the market knows all this. It's not a mystery, so to speak. Okay, so Microsoft. Again, it's a good move after hours so far. We'll see it where it is in the morning. Taking a look at Google here. Google, kind of crapped the bed a little bit. So the daily chart here on Google is actually really good. And so if we look at where it's trading after hours, let's call it 130, that would take us back to about right here. So not the end of the world, certainly not the end of the world. I don't think Google opens and dies. Maybe it does, but I don't think it does because it's pretty contained. So essentially, just looking at Google kind of staying in that range, and then Microsoft, of course, looking pretty good. And if we do look at kind of the S&Ps on this bigger picture, we were up 30 today, basically pinning at 42.50. All right, so some of the key markets here. So on the S&Ps, again, keep in mind that, yeah, look, the weekly chart here is ugly, but just as, you don't want to buy when it's extended, you also don't want to short in the hole. So, I think the idea here that this could fire short is pretty strong. But the best scenario would be so that's the weekly chart, right? That's a big, big mover on the weekly chart. But if we look at this, the idea is kind of, let's get back into, this is like 4,300 here, kind of pop in there, kind of shake everybody up a little bit, and then go. Doesn't mean it will, but that's typically what happens. And then if we drill down over here into the daily chart, you can see that these are the Keltner channels. And, in an extreme market, we ride -3 ATR down. That does not happen very much. In a normal market, what happens is this is the 21 EMA. And then, typically at 1 ATR, it's kind of a soft move up. It gets rejected. And then it goes back to -1 ATR. And if it's extreme, it goes to -2 ATR. And then from there, it works its way back to the mean. And then that's just becomes kind of the path where it spends a lot of its time. So if we look at right here is a good example when we were kind of chopping around, and we fell, we rode -1 ATR down, so we tested the 21 EMA every day. If every day you just shorted the 21 EMA, and you traded the path of least resistance every day, and then it broke. We got to -2, -3 ATR, and then we came back to the mean. and then we got rejected back to -2 ATR and came back to the mean, and then we went to +1 ATR. All right, so these things, and the reason this works is because there's a ton of algos out there that, you know, they use average true range, you know, all this kind of stuff. So that's why I don't get excited about the downside here. It's more interesting here, right? And so now I just kind of look at everybody that got short, is the idea of like, man, they're just gonna have to cover their shorts here, and that's what fuels us up. So a lot of, you know, it's like, oh, there's so much bad news. How could it go higher? Because shorts are getting their asses kicked. That's why, and you know, they got to cover. So that's kind of how that works. So some interesting things that happened today. The dollar index was strong, and that was, you know, looking to see if the dollar was going to actually roll over, and there was kind of a decoupling today. Typically, if the dollar's up, stocks are down, and that didn't happen today. So it's been a lot more about the VIX expiration last week and all that kind of stuff. But the other big thing now is interest rates. So interest rates, the idea here is that we hit 5%, kind of that magic 5% level, and at a 5% 10-year note, that's 8% mortgage. And it got rejected hard from there. So the question now is, are interest rates, you know, are they done? Are they going to start working their way lower? Are they going to plateau? And that's really what the stock market is focused on. And then, of course, the long bond here, this is longer term yields. Did we just bottom here as well, 107? And keep in mind, you know, the long bond was at 185. This is the biggest fall in long bond bonds since the Civil War. You know, that's a long time ago. And at some point they bottom out, and rates. You know, I don't think we're gonna see bonds here in any time soon again. But the idea that at some point the Fed's going to stop cutting rates and then stop raising rates, and at some point start cutting again, probably, you know, in a year or so. This is kind of very forward-looking. And last but not least, Bitcoin. You know, why is Bitcoin taking off? Bitcoin here, I think, is a front runner, a precursor to quantitative easing. So I think Bitcoin and crypto were the biggest beneficiaries of quantitative easing. Okay, case, you know, right there. And they front ran it, right? Now, I do think that at some point when we see quantitative easing again, Bitcoin takes out these highs. Now, it's not going to be an easy ride. You know, this is something we've talked about this a lot, where it's like, you know, you just dollar cost average, dollar cost average, dollar cost average, dollar cost average, and then you hold on for the ride. Try to trade this stuff, I think it gets a little tricky. But I do think that, well, I don't think, I know that at some point when the Fed starts doing quantitative easing and expanding their balance sheet, okay, when they expand the balance sheet, that has to go somewhere. It doesn't happen in a vacuum. And so that's when all asset prices rise. That's why real estate rose, you know, that's why stocks rose, and that's why crypto rose. But the biggest beneficiary of that has been crypto. So when the balance sheet expands again, certainly look for crypto to be a beneficiary. But again, I think trading that stuff's hard. You just got to buy it and don't look. All right, hope it helps. You guys have a good one. See you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.